Hi, it's Wednesday, the 15th of December, and we're taking a look at energy sector this morning. We're going to take a look at WTI crude oil, Brent crude oil, and also natural gas. Let's start with the higher time frames and then drill down. The weekly chart on WTI crude oil. We can see we've had the impulsive move higher from April 2020. This capped out and stalled in front of the $85 level, and since then we've had the first leg of a correction lower, which has stalled around the previous resistance, now turned into support area between 60 and $66. The reaction from here is in the form of an AB correction. We expect to see an ABC correction along the lines of something just like this, which tend to get at the end of a impulsive move higher. So really looking at where we can look for this reaction to stall or top out. If we look at the daily chart, we can see that the levels, resistance levels above, we're taking from a previous swing high back in on the 6th of July 2021, and also this supportive level that we saw in October. So this gives us a band of resistance around about the 74.70 to 76.35 dollar area, so like a $150 range of resistance, which coincides also with a 61.8% fib retracement from the swing high on the 25th of October to the 2nd of December swing low. So that's the resistance we're targeting. There's a 50-day moving average just above that to back that up, and that would be a natural reaction during a corrective phase of the market. So really drilling down to a shorter term time frame, the 4-hour chart, we've seen this sort of inverse head and shoulders formation has stalled at $73. Still potential for a little bit of upside here, however under pressure over the last 12 to 14 hours, and support coming in the form of the Ichimoku cloud. Really need to see a break either of the 73.13 level or a break down below this support area of 69.35, and then we should get a little bit more of an impulsive move within that correction. On the Brent crude oil side of things, we see resistance coming in around about 75.50 to 77.50. That would give us the same sort of formation, the same sort of corrective phase of the market that we're seeing. So short term, we're looking for a little bit of a move to the upside, should be capped, gains should be capped, and sellers should come in around about these resistance levels that we're seeing. Now, natural gas has had a little bit of an interesting move, should we say, on the weekly chart. We saw this almost abandoned baby type formation where the market has gapped a lot lower over the weekend, and that left this bullish hammer type candle, which is a positive looking candle, but really need to sort of recapture the ground above the $4 level to put in a bottom in this market, and it hasn't quite done it yet. If we look at the daily chart on natural gas, we've seen the correction to the upside has filled the gap. This, let's get rid of these Fibonacci levels to start with. This has filled the gap, so the abandoned baby is not really a formation we need to really look at. But the rejection from this $4 level was quite interesting, and we can see it a little bit clearly on the 4-hour chart where we saw the up move here. So the bottom of the move, $4.01, we saw the price action move higher, fill the gap and run into resistance from the 4-hour Ichimoku cloud, and this potentially opens up a move to the downside. Now on the if we're looking from a double bottom perspective, we can see the low here at 363, the low here at 364, and this would be a neckline break. So a break above 405, in my eyes, would allow further upside to recapture ground that we saw maybe going back to the end of November. However, if we don't get that move and we see a break of the 362 level, that really opens up further downside and a target of down to 340, 350 area. So natural gas looking a very interesting prospect, and really sort of seeing how that plays out. If we look at the shorter term time frame of natural gas, we even see this inverse head and shoulders formation, looking really for a break of the 380 level to initiate a correction back to the resistance around about the 402 to 406 level. On an intraday basis, you can look to fade this move, and really until we get a break of that horizontal resistance line at 380, negative forces seem to be in control on the natural gas. Okay, thanks for joining me this week, and look forward to chatting again next week.